So the last couple of days, the futures, have really seen volume decline pretty materially. The question is what does that really mean? And, we have this rising channel. It's hard to say. I mean, obviously when volume declines, it's usually an indication of a lack of interest or a lack of sellers. So I'm kind of just watching that, and I'm kind of interested in it just because it seems, as we've kind of spoken about, the market just feels like it's running on fumes, and it doesn't really have very much room to maneuver at this point, given where realized volatility levels are, which are really depressed. When you look at realized vol, right now it's trading around 11.5, which is a fairly low value. I mean, it could certainly go lower, and it has gone lower in the past, but it just means that the daily movements in the market have to get smaller and smaller to a point where you're moving less than, let's say, 0.5% a day. And, you can clearly see in 2022, we didn't really have many days where we didn't really have realized vol go very low. In 2021 we did, and obviously in other periods of time we did as well. But, again, we're kind of at that lower end of the range, which would suggest that, market movements get more suppressed in these type of environments. And really, I think part of the reason why you saw the S&P even rally the last couple of days was because they were able to get implied volatility a little bit higher, and then you can see they brought it back down over the last 3 days. We had gotten over 20. And so when implied volatility rises and then it comes down because of positioning, that pushes the market up. And that's what you've generally seen the last couple of days. And that's why today we were back to that grind. Really when we kind of think about, where we are, we're up at the upper end of the range, and the move higher has certainly been somewhat surprising. It's been very frustrating because a lot of it has come on, nonsense type headlines. Oh, we're going to get trade deals. I expect trade deals to come in the next week. They've only said that, every week since April 9th. And there haven't been any trade deals yet. This whole thing with the trade deal in China, I mean, that was a whole, other joke because there was no deal. The market has moved up, on headlines that weren't really necessarily things that really should have moved the market. So it's kind of like you look at it from that perspective, and it's a very frustrating environment, so to speak, because when you try to actually try to be an intelligent investor and assess risks, and not just close your eyes and buy or sell, it's a much more challenging experience when you're trying to assess things on a realistic basis. And so, again, when you kind of look at on the S&P 500 and you just invert the chart, I mean, you would think you were looking at the VIX index. Basically, I mean, when you overlay the two, they look, basically identical, which really tells you that implied volatility coming down has largely been the leader in terms of where the market's going. And I think what's a little interesting as well is that notice that implied vol, at least on a closing basis, actually hit a low on June 6th, 16.78. And today we hit a low of 16.75. So, but notice that we're, higher than where we were on June 6th. And you can even see here on May 16th, we got down to a 17.25. So, a lot of the reason why we've continued to grind higher is because, they've been able to get implied volatility up and then bring it back down again, get it up and bring it back down again. And each time successively, it has led to another move higher in the S&P. So, again, I think you have to largely watch your volatility levels very closely, because I think, those are going to tell you where this market is really heading from that perspective. And, Another perspective is if you look at the VVIX, that's also getting to the lower end of the range. We've been kind of just bouncing off this 85 to 90 region since, call it, May of 24. And so again, like, this is another thing you can use to kind of get a sense, because usually this will start moving before the VIX index will actually start moving. And so if you start seeing the VVIX index moving up, that can sometimes give you a little bit of an early warning sign of, what's to come. So, the other factor is that it's, again, kind of running towards the low end of the range. It doesn't mean that it still can't go lower, but you really have to assess that risk of, how the market is kind of positioned at this point. When you look at the skew index, that's also, kind of moved back up, which would suggest you're seeing some more, tail risk hedging. You're seeing some more hedging taking place for tail risk. Again, not nearly as high as what it was back here in February, but the interesting thing about this is that historically this is actually up towards the upper end of the range as well. We had, obviously a few examples of where it got higher, but that's been more recent. But historically, this has been also the upper end of the range. And when we look at the MOVE index, which is the measure of bond market volatility, you can see we're also getting back towards the lower end of the range. And so either you're going to have a complete collapse in implied volatility, really across, asset classes, to really get the S&P 500 moving even higher. And it's not to say that that can't happen, but it is to say that you're sort of at levels that have been very important in the past. And unless you're going to see them really come down sharply, it's going to be harder for the market to move up from here. And the other thing, obviously, is that this market largely has been only as good as Nvidia. And, the reason why we've been able to come back and get to where we are is because Nvidia managed to move up today. Now, you'll notice when you look at this chart, we got up above 73 on the RSI, and you're above the upper Bollinger Band. And typically when you get readings of, on Bollinger Bands, index prices above Bollinger Bands, and you get RSIs above 70, call it 75 even, that typically coincides with some sort of turning point, just like when you get RSIs, down at 30, along with the stock moving below the lower Bollinger Band, that tends to indicate, some sort of bottom. Built a Pine script actually to do that. And it's a little bit more strict than what I'm demonstrating to you right now. But essentially, if I just tweak this to read that it's at 73 instead of the setting I have at 75, which doesn't really make much of a difference at this point, but it will trigger, and it will show you that, multiple times, that whenever you get to these conditions where, you're trading above the upper Bollinger Band, and you have a condition where you're trading above 73 on the RSI, you get, these signals. And it doesn't mean, again, that it has to collapse, but it tells you that price is overextended and it needs to come down, or that price is oversold and it needs to come up. And it's, worked fairly well in the past. So it's just something that I kind of keep a loose eye on. And generally speaking, again, we're just sort of at this point where we're also just a couple days outside of option expiration. Again, I pointed out today with my members that, we have to be careful when you're coming out of OpExes, because, here was an OpEx and we moved up, 2 big days where we moved up. And in fact, everyone at this point was thinking that we were going to get face-ripping rallies back to the all-time high again. And we ended up going back the other way, and even if you go back to here, right, we got this move lower after OpEx. And even I, at that point, thought we were going to go lower because it seemed like a really convincing drop that day. And we ended up moving up. So again, like, it's not an unusual thing that we had an OpEx and now you moved up 2 days in a row. And so again, you need to be mindful of the switching in terms of option positioning around these OPEX days. So generally speaking, I think that a lot of the things said is from a volatility, from an option standpoint. This is not an ideal place that the market should suddenly turn lower, but just that I think it gets much, much harder for us to continue to move up in the manner in which we've been kind of moving. And that's why we've been kind of grinding more recently as well. And the other thing, obviously, is the dollar index is obviously now at a point where it, again, is breaking key support levels. And we kind of went over this a little bit the other day. But clearly, now you're in a position where the dollar can really start to maybe break down and move back into this 95 range on the DXY. And you're seeing it with the euro. I guess there was some news reported by the Wall Street Journal tonight that said that Trump may be looking to announce Powell's replacement as early as the next couple of weeks to kind of just override him because he won't cut rates any sooner, which is really unfortunate for Powell. But, generally speaking, the euro is obviously clearly breaking out now, or attempting to head towards this 119 area, which is, I think, ultimately where it's heading. And you're seeing the same thing with the pound, which is also, again, breaking out and heading towards 137. And you're also seeing the Japanese yen, getting to a position where it can start getting back down to this 142 region. And interestingly, when you look at the Taiwan dollar, that's also continuing to strengthen. And again, this is the importance of the dollar right now weakening. And I think the dollar weakening is something we need to pay attention to. Obviously, with the dollar weakening, you would expect gold to go higher, but gold really hasn't gone higher and hasn't really responded to a weaker dollar. And so you just have to wonder why that is. Is gold kind of topping out here? That's something that I think is potentially possible. And then I guess we'll finish with one thing that I'm kind of working through and I don't really have a good answer for. When you look at the Russell 2000, we've often talked about the relationship between the Russell 2000 and the Kospi in South Korea. And again, this relationship has been very strong through the years. Anyone that's followed me knows that I look at this all the time. And I know that there have been many comments in the past about how stupid this is. And those people were always proven wrong in the end. I guess the one thing that I'm kind of wondering now is, clearly the Kospi has gone sort of vertical here. And, obviously the Russell 2000 hasn't. But notice that the Russell also, really traded significantly higher going into November, while the Kospi was really selling off in a big way. And so the question really becomes is, are the Kospi and the Russell just kind of evening out now after the Russell had a really big, where the Kospi had a big period of underperformance? Because if you notice from this standpoint, from here to here, the Russell has underperformed from that perspective. But again, hard to say. When you look at it from this perspective, it certainly would make you think that maybe the Russell's going to suddenly rocket higher if that is the case. But I don't really have an answer for that. I just don't know. It's hard for me to sit here and to think of a scenario where you could get small caps moving that rapidly outside of just pure speculation. But at the same time, I know that when the market was going higher like this, I was kind of fighting it and saying, no, but look at the Kospi and look at it's coming down. And sure enough, that was also kind of rectified. So I'm not really sure how to think about this, but I thought I'd point it out because I think it is interesting. And, clearly that's something that, is worth paying attention to if you follow this indicator like I have for some time. And obviously the Kospi has gone, vertical. This is only in Korean won. If you actually put this into US dollar, the move is even bigger because the Korean won has strengthened materially versus the Kospi, up nearly 50%. And believe it or not, there's actually an ETF that trades here in the US, and you can see it's priced in US dollars, and you can see how it's up 50% off of those lows. And it's a similar, if you look at Taiwan, it's also a similar type of move. This is also in US dollars because the Taiwan dollar strengthened materially, and that's also up 45% off the lows. So this is because you've had a stronger Taiwan dollar and a stronger Korean won, and you've had the appreciation of the stocks. So you get that double benefit of the stronger currency along with the moving market moving higher. So something to pay attention to and be aware of. But otherwise, have a great rest of your night. We'll see you again soon. And please remember to subscribe to this channel, like this video, share it with your friends. Talk to you later. Bye.